Hi and welcome back to Cheeky Crypto. My name is Nick and today we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently, what we'd expect to happen next and all that wonderful stuff. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Now, if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. You'll also find a whole host of additional links down in the description below. Everything from our new partnership with BitGet, where we're offering exclusive promotions and deals and things going on with BitGet and Cheeky Crypto's community. If that's of interest to you, check that out. We've also got our Patreon services. We've got Nexo, we've got Ledger, we've got the community-led Cheeky podcast. There's a whole host of different things down there. So why not go ahead and check out any of those that are of interest to you. Okay, let's get a start on this. I'm going to keep this as brief as I possibly can on a Saturday morning, so we can go through as much as I think is important, but I do expect it to be a slower weekend than usual. So let's go and spend a little bit of time here just kind of going through what's going on. Okay, so I think we're going to start things off actually with our kind of on-chain data. Okay, so as we can see here, we've got 8.89 million Bitcoin going onto exchanges in 2022, and we've seen 9.16 million coming off of exchanges in 2022. This is from the 1st of January. We can see that the net difference between the inflows and the outflows, so you can see a little bit of positivity here, as in more Bitcoin coming onto exchanges than has been coming off over the last few days. Otherwise, it's seen generally a little bit of accumulation, but reasonably flat as the price was pushing up, which we obviously know why. I'll talk about that in a sec. So the exchange balance, or the Bitcoin on exchange, has been coming down, and we recently have seen an uptick in the amount going on. Down at the bottom here, we have the hodl waves. The hodl waves are an indication as to how long BTC has been static for. Okay, so here we take a look and we see if there's any major movements with Bitcoin that has not moved in years. Has it all of a sudden moved? So this is broken down into more than 10 years, 7 to 10 years, 5 to 7 years, 3 to 5 years, 2 to 3 years, 1 to 2 years, 6 months to 12 months, 3 months to 6 months, 1 month to 3 months, 1 week to 1 month, 1 day to 1 week, or the last 24 hours. Now, this is basically your circulating supply, broken down into buckets of time, if you will. So on the highest range, we have more than 10 years. We argue that this is lost Bitcoin, Bitcoin that's no longer accessible, Bitcoin that people have forgotten that they even had, dust from 10 years ago, essentially. That's now really valuable dust, but was dust not very valuable back then. So we argue that 13.14% or 13.14% is lost Bitcoin, Bitcoin that's no longer accessible, people that maybe lost their keys, lost the hard drives or whatever. And it hasn't moved for over 10 years. Now, there's obviously going to be a pocket of that is still accessible, but the majority, I think, is going to be Bitcoin that's no longer actually around. So that's a huge chunk of the circulating supply that might no longer actually be there. The 7 to 10 years, we can see that there's no change day on day at 6.38, so still static, still remains long-term holders. It's got a slight increase with our 5 to 7 year holders, right, going from 5.24 to 5.26, so that's looking pretty good. That means that we have a slight decrease with our 3 to 5 years, going from 14.22 to 14.21, and then we have pretty much a slight increase here as well on our 2 to 3s, going from 6.26 to 6.27. Slight increase as well with our 1 to 2 year holders at 20.51 to 20.55. Anything lower than a year, I'm not overly that fussed about, and we see activity in the last 24 hours, day on day, changing, dropping from 1.36 to 1.06. So essentially, lower activity, which we can kind of see within the space at the moment anyway. As we come on over, we can see and start to talk about the inflows and the outflows. We had this huge spike up here, and this was on the 14th of September. We had 236,000 coming off of the exchanges and 236,000 going onto the exchanges. We've seen this come down a little bit here, and we are now down back to these insignificant levels around the 24,000 going on, 33,000 coming off, so a little bit more accumulation recently. But for the most part, we really want to see more consistently high numbers if we want to be in a bull run, but we aren't there yet. Let's take a look at the wallets, right? Here we have 3 wallets broken across 90 days. Each graph is a 90-day range. We've got 10 Bitcoin or more, 100 Bitcoin or more, 1,000 Bitcoin or more. Essentially, these are dolphins, sharks, and whales, as I've called them. Whales, I think, is a pretty self-explanatory. Sharks, I've called them sharks because they aggressively follow the price action, at least they did until most recently. And the dolphins are just your high net worth retail investor who, they just accumulate Bitcoin and all of that. So we also have the shrimps, power to the shrimp and all those, 120 day range on this one. The black lines are the wallets, the orange lines are the prices. So we can see here we actually have reasonable amounts of accumulation happening here day on day for our shrimps, right? We go from 902,000 to 902,250 to 902,304. So as that price pulled back, they accumulated. Okay, and as we come back up into our dolphins, you see this the opposite. We actually see these guys getting shaken out of the space since we had this high point and this recent pullback. Some of these guys have exited out, and we can kind of see that there. We can also see that the sharks are exiting out a little bit before the recent pullback. So before we kind of moved up a little way, they actually kind of started shaking out of the space. They accumulated a little bit on the way up, and then we're shaken back out. And over the last couple of days, they have increased ever so slightly there. Now we can see the whales, they pretty much, they sell into the pumps, and they don't really sell the dumps so much. But recently they have been still using this as liquidity to come out at places. So again, the whale wallets are still de-risking. They're still coming out. The sharks are coming out. The dolphins were shaken out a little bit, but nowhere near to the same degree as the others. One of the big key takeaways here is obviously the whale wallets, the black line you can kind of see, even through July and August, as the price was pushing up to the highs of around $25,000. You can see that these guys are just using that as liquidity to get out of their positions. They were not buying that pump in the same way that you saw over here with our dolphins or our shrimps, for example. So understand, follow the money, do as they do, not as they say, all the usual things I talk about on the live streams. But yeah, basically at now, even the recent pullback, still de-risking, still coming out, still coming out, still coming out. The only ones that I see that are actually buying are 1 Bitcoin or lower, essentially here accumulating during the dip, buy the dip opportunity, as they often say. So when it comes to those things, it's important that we kind of keep an eye on, what's going on with those whale wallets, so we give a good idea as to kind of what's going on. Okay. I'm kind of running through this as quickly as I can today, so give everyone all the kind of stuff that they need to know. Let's move on to the next piece, okay? And the next one that we're going to be taking a look at is going to be the longs and the shorts within the space, okay? Who's feeling bullish? Who's feeling bearish? What is it swinging to? Are we as a community feeling that we are going to short the market or long the market? And I'll do the opposite, and I'll show you why. So right now we are 54.72% long, okay? Meaning that there is a pocket of liquidity down lower in the price charts. Okay, we talk about this all the time. Basically, if you're going to be using leverage, you're going to go long or you're going to go short. And when you go long on the market, a pocket of liquidity is opened up down lower. That's where you liquidated. If the price goes down to that point, you get liquidated out of your position, right? Now, if a lot of people are going long, as in 54.72% of people are going long, then that pool of liquidity down lower in the price chart is reasonably large, right? And what you tend to find is that whales will gravitate towards the liquidity so that they can take advantage of it. Now, normally when the prices, or when people are shorting, or retail investors are shorting a market, and that's the majority, and the price of, or the pocket of liquidity is actually up higher in the price chart, what you tend to find is the whales are able to gravitate the price towards the liquidity and then use that liquidity to exit. Likewise, when the liquidity is down nice and low, they can use that liquidity to accumulate. Okay, so understanding what they're doing in terms of de-risking doesn't necessarily mean that they're necessarily going to move the price down. Okay, they might actually look for allowing the price to rise up. But it'll be interesting to kind of see how this one plays out. We are swinging it reasonably high here as of 2 hours ago, 54.72%. Okay, now down here we have the last 1 hour. We can kind of see the difference in the makeup here. It's actually 52% now. from this kind of standpoint, but I think this is going to fluctuate a fair bit as well. So let's take a look, right? Let's have a look by platform. Where is the bearishness coming in and where is the bullishness coming in, okay? So from Binance's point of view, slightly more bearish at 51% short. OKX, slightly more in the way of long positions. BitGet, 53% longs. We've got FTX 60% short. We've got 50-50 there on CoinEx. But Bitfinex is the biggest one we can see here. 85% of people using Bitfinex are going short on the market. So that's really interesting. Okay, so understanding that there's actually, you know, reasonable pockets of liquidity that's going to potentially create pockets where the price might gravitate towards it. Okay, so just keep that in mind. We have changed in the last couple of hours, feeling bullish to more bearish, at least on these major platforms here. Okay, let's take a look at those liquidations, right? So we've actually had really reasonable liquidations in the last 24 hours, only 127 million. Of course, the majority of those are still coming from Ethereum, with Bitcoin being pretty much just a little over half of what the liquidations were for Ethereum there. So for the most part, looking pretty good. But again, I would expect this to increase as next week comes in. I wouldn't expect it to increase over the weekend, maybe Sunday evening, maybe, but for the most part, I would be looking at this as a next week thing. I'd be happy to kind of see this one being reasonably low in the space. Now, what was getting liquidated, though, in terms of longs or shorts, and where was it being liquidated from? So OKX took the top spot at 38.3% of the total amount of liquidations, of which 74.6% of them were long positions, which means if you were using OKX, you were the unfortunate souls that unfortunately was liquidated the majority of the space, and it was long positions that were the majority of OKX's liquidations, right? So we would take a look at that. It was $36.4 million worth of long positions that were getting liquidated in the last 24 hours there, with 12 million being your short positions. In fact, across the board here, we can see that it was pretty much long positions that were getting liquidated yesterday. So Binance takes second place at 26%, Bybit takes third place at 13.2%, and so forth. So for the most part here, it's looking pretty interesting. It was definitely long positions that were getting liquidated. This is because the market turned on us pretty quickly yesterday. It looked like we could go long, and then if you didn't get out quickly enough, you were liquidated because they had a kind of like I guess they call them scam wicks, where it was just kind of comes down real quick, liquidates people, then kind of gravitates its way back up again. So it didn't surprise me that it was long positions that were getting liquidated out of here. So always make sure that you're fully aware of what's going on. Use a tighter stop loss if you're not that confident in the space. And if you have no stop loss, no trade, all that kind of risk management stuff that we talk about down in our Discord server, of which if you haven't yet joined us, go ahead and check it out. Link in the description below. Okay. Let's now get into the meat of it. Let's talk about this. Let's go into the price chart for BTC, what's going on, what we expect to happen next, and all of that wonderful stuff. So, as we were talking about yesterday on yesterday's live stream, we were talking about this parallel channel, okay? Let me just bring this up a little bit more just over here, okay? And we were talking about the requirement, the need to come down ever so slightly lower. I'm just going to move that to there because it fits better now, I think, and I'm just going to adjust that up. There we go. So we were using these two wicks over here. Let me just talk about that for a second first, right? We're talking about this wick, and we were talking about this wick, and creating a parallel channel. And we actually had this one, and we had this one all touching here, and then we had that one. And we were saying that we probably had to come down for a third time. Now, this one narrowly misses, but this is kind of what we were talking about, and we were actually looking at it more coming down towards 19,464, but we missed that, okay? But instead what we saw was a move up, and then we saw this breakdown, and this is one that I'm talking about. This is the one that caused a lot of liquidations, okay? Because it looked like we were going to move up here and test this upper level, okay? And then all of a sudden we saw this move to the downside, okay, just over here. Then, of course, we come up, we test this higher area, and by adjusting it off of this wick, putting it here, here, and here, we now actually have two touch points, at least at the top and the bottom, and we can start talking about maybe coming down, retesting maybe the midline, and then having this kind of run out of here, this breakout to the upside, okay? So when we talk about, people calling Bitcoin going short, essentially, yes, there's a small moment to the downside, I think, but essentially what I would be expecting is a break out of here to the upside on a slightly longer time frame, okay? So for now, this parallel channel, you can call it many different things. Essentially, it's a series of lower lows and lower highs, and these tend to break to the upside, okay? Now, let's talk a little bit about that momentum, okay? So what we were looking at, right, was being actually pretty reasonable around this level here, looking to come up. We went up into this overbought area far too fast. We saw this pullback. So this was kind of the point of we should get out around here because we were overbought and wait for it to come over to the oversold area. So we come back down, we retest, we're back to the overbought area. Okay, this time we actually moved up higher than our other area that we were up in this overbought area. So we had more momentum behind that price movement, as you can quite clearly see from the price, but we also end up in a very similar areas on the stochastic RSI. So we know that we have more momentum behind the price. That's pretty clear there. And we are looking now to come to the downside, right? What we want to do is we want to see this correct down. We want to see our stochastic RSI come back to this oversold area. So I'm going to estimate this is going to be around the midline, around the 19,600 level. And then from there, we can talk about having a bit of a run to the upside. Now, on our 4-hourly chart, we're overbought. So again, we're looking for that move to the downside. The 8-hour, it's actually in a really reasonable position. It's oversold. We can look for a rally. We are midway through on our daily chart. So pulling back down, maybe even testing the lower range of that parallel channel one more time, could be putting us on a good daily position for a good run to the upside. The weekly hasn't changed, though. The weekly still needs to come down, but we are looking for this move to correct us, right? The hourly, the 4-hourly, maybe even the daily to a degree. We need to come and talk about this correction. Now, we could come down to this 19,600, but I think that 4-hourly chart and the daily chart might actually require us to come down more towards the 19,200 level on this lower range of this channel before maybe we have that momentum to take us up. It's going to be one of those that we don't necessarily know. Okay, so that's kind of where this channel sits, and it's an important channel. Now, from an Elliott wave theory point of view, we are looking for 3 waves here, and for the most part, we've already kind of completed the minimum expectation on that. All we're now needing to do is exit out of here, and we've kind of got our 3-wave structure done. So for example, this would be wave 1, this could be a wave 2 bounce or wave B bounce, and then wherever this ends up is our kind of 3rd wave, and this could be many different things, but it's not anything to be concerned with down here, I don't think. I think we are looking for that move upwards. I'm happy for this to go as low as possible as well, and that doesn't bother me. I think the lower the better, as long as we stay above 18,510. But we are looking to still come back up into our yellow box area, okay, and I'm looking for it to come up higher than 22,799, and I'm expecting it to be a 5-wave breakout. So 1, 2, 3, 4, and 5s like that. And then basically what that'll do is it will allow us to say that this is an A wave, this is a B wave, and this would be our C wave. That there completes a 3-wave structure. And if I zoom out, that means that we can then take into consideration this 5-wave drop over here, and that could be an A wave, that could be a B wave, and then we can start talking about maybe coming back down and retesting the June low as a double bottom, or maybe even breaking down into new lower lows, right? So there's a lot of things going on with Bitcoin. It's all nesting together. A lot of people focusing in on the kind of the micro movements, and they forget to zoom out and understand that the macro is bearish and there's short-term bullishness at pockets and places. So we are looking for this run upwards, and this completes an ABC 3-wave structure that's a B wave or a wave 2. Could be either, and then we'll look for that downward macro direction. Okay, so we're not out of the water, the worst not behind us, we're not out of the hot water yet, and we've got a long way to kind of go. Nothing is going to be quick. It's not like, you're going straight to the moon straight away or any of that stuff. We are in a bear market, we're not in a bull market. The differences and the definitions behind those are very, very clear. Okay, a bull market is defined when the demand outpaces the supply, and of course, a bear market is defined when the supply outpaces the demand, and that's currently where we sit when it comes to cryptocurrency. It could last a month, it could last another 6 months, it could last another year, it could last 2 years. No one really knows how long those things go for either. But for me, when I take a look at it from an Elliott wave theory perspective, I think we're getting close. We're not there yet, but we are getting close. We obviously have the whales indicating that they're de-risking, they're coming out. When they start accumulating, you can be sure that the bottom is close. Guys, I'm going to leave this video there. If you found it useful and informative, entertaining, hit the like button. I do appreciate that. If you happen to be new, make sure you subscribe, tap the bell, select all notifications. If you haven't joined us in Discord, check it out. Links are in the description down below, and pick up the conversation down there. Anything you want to know a little bit more about, join us down in Discord, and we'll be happy to assist where possible. Guys, until the next one, have a fantastic day.